Good evening. I, TATA Chakraborty, on behalf of KCM Connect, welcome everyone to this episode of live webinar session. KCM Connect is an established organization in customized software applications, applications on transport and logistics, and also take an initiative in technical and skill development along with Industry Culture Connect segment. For more about us, please check our website www.kcmconnect.com. On behalf of KCM Connect, I welcome today's speaker, Mr. Chandrashekhar Balasubramaniam, the Joint Chairman Manager Finance of TATA Tinplate Ltd and currently visiting faculty of Finance of XLRI Jamshedpur. KCM Connect is extending warm welcome to distinguished guests and participants from Confederation of Indian Industries and members of Young Indians. It's our pleasure to have your presence in this webinar. Let me remind some of the rules of our webinar session again. The webinar will last for 45 minutes, where our esteemed speaker will talk on the topic. Thereafter, we will take 3 questions, one after another. To ask questions, please use reaction button and type your question in the chat box.
Rajiv, for giving me this opportunity of sharing my thoughts on this, my favorite subject. All along, all the industries I have been associated with, I have always insisted that working capital is a very, very important strategic issue. And during these Corona times, it is more, strategic now for our own survival and continuity in the business. Today, what I will discuss mainly is to see how we can conserve working capital during these difficult times. And as you know, cash is the king. And we have to always keep in mind that we have to shorten the working capital cycle in such a way that you get your working capital converted to cash as early as possible, as quickly as possible. Before we do that, I would like to give you a few fundas about working capital. There were people who are trying to scale down the investment to fall in line with the MSME criteria. So the criteria has been changed to turnover. While registration is not compulsory, it is better to register because you get a lot of advantage in terms of funding, in terms of going to the bank for funding your investment, working capital requirement, and so on and so forth. Then, these are the characteristics of working capital. These are short lifespan, and unlike capex, which are having a longer lifespan, and they are kind of irreversible decision. In case of working capital, these assets are having short lifespan. They keep on changing in their size and shape and characteristics. And in a span of few days, all the assets turn into cash. Like if you have got raw material, it goes into work in process, then it goes into finished product, then it goes into receivables or debtors, then it comes to cash. You will observe that at every step, you are adding value to the asset. You are adding value from raw material to WIP and so on and so forth. And after it becomes finished product, sometimes it goes to your stockyards also. And thereafter it goes to our customers. It becomes receivable. After the receivable cycle, it comes to cash. So this is called the cash to cash cycle. Cash to cash cycle. These are some of the constituents of. So our objective should be, as usual, as these are difficult times. These are very difficult times, and our objective should be always to see how the transformation of assets into cash takes place as soon as possible. That should be our objective. As we go along, we'll stress on these points. These are some of the constituents, important constituents I have put on in the terms of working capital. These are like inventory of raw materials, WIP, etc. Receivables are very important part of the inventory, and these are small items, cash and bank balances. And on the other side, relief is given to the extent of accounts payable because you have not yet paid for the asset received. In the short-term borrowing, when you go to the bank, what they will do, apart from short-term borrowing from the market or from other places, they will also classify current maturity of long-term borrowings into the short-term borrowing. That's how the banks will classify. So the short-term borrowing not only includes current short-term borrowing, it also includes the current maturity of long-term borrowing. And there are provisions like salary not paid, tax dues and GST and things like that. So net working capital is arrived at like this. Okay, these are some of the factors which influence the working capital. I don't have to stress on nature of business and seasonality. An important part of this is production cycle. If your cycle of production is too long, then the requirement of working capital also becomes long. So as we go along, we shall see how we can do something on this particular item of production cycle during these difficult times. Market conditions, what I have to say is that let us segment the markets. In these difficult working conditions, there are segments of market which are highly profitable, then there are moderately profitable, then there are more demanding markets, there are more demanding customers, and some of them are high volume with low margin, and some of them are high margin and low volume. So according to our production criteria and production cycle time and the work and your technical skills available, we have to position strategically our markets in such a way that your operations are ramped up as much as possible. Similarly, in the receivables, you should have a receivable policy. What I would suggest to the MSME units is that you should always segment your customers in such a way, at least during these difficult times, that you cannot wait for cash to come in. You should have concentrate on those segments of the market which are having less, credit period. That way, again, you will require your working capital you'll require less working capital than what you will otherwise do. During normal times, you can still wait for high margin and low volume markets, which you can afford to do that. But during these difficult times, you cannot do. You have to segment your market in such a way where you are more comfortable in terms of receivables, so that your cash conversion cycle becomes less and less. Similarly, you should have a policy for your vendors. Like in recent times, Tata Steel has announced that there will be no payment for 45 days. So you can't take that drastic step if you are not your business model does not permit it. But as much as possible, our objective should be to advance the cash inflow and postpone or defer the cash outflow. That should be our strategy during these difficult times. Here is a small example of the requirement of working capital. This is an actual unit. This is an unit which I assist, and these figures have been altered to explain my point of view. That this unit is having a raw material inventory of about 101 days, and WIP and finished product of about 45 days. Receivables are 73 days. You see, you've got receivable is 30 lakhs out of a turnover of 150 lakhs, 30 lakhs against 150 lakhs, which is about 73 days. There's a relief to the extent of vendors payment, which is 41 days. You see that the cycle of conversion from raw material to cash is as long as 178 days. If his annual cost of sale is 122 lakhs, this guy will require 61 lakhs of working capital facility. Banks will never give this kind of facility to a small unit like this. On the upper side, bank will at best give you like 3 months turnover, which will be 1/4 of this 150. Hardly bank will give you 37 to 38 lakhs for this kind of unit, and the requirement is 61 lakhs. So this you need to do something here so that this total cycle of conversion comes down to 1/4, like 1/4 of a turnover. That should be our objective. How you can do, the unit will decide, but I am assisting this unit to see how it can be done. See, this is the cash conversion cycle. Inventory period, account receivable period, minus account payable. This is the cash conversion cycle. In the example I've just now given you, there, this is 45 days inventory period, receivable is 73 days, accounts payable period is, receivables are 73 days, inventory period is 146 days between raw material, WIP and finished product. And accounts payable period is about 41 days. So net to net will become, this cycle is 178 days. So if you crash the inventory period, if you crash the receivable period, if you elongate the account payable period, all this will become comfortable in terms of cash conversion cycle. What banks will do is that so far all these banks were always funding us on the basis of asset. They are very comfortable in terms of asset-based lending, but that is not what the RBI wants. RBI now wants that they should shift to cash flow-based lending. This very important change the RBI is advising the banks today. In terms of net working capital, they will finance 75% of net working capital. Now the issue here is that in arriving at the net working capital, they will eliminate those which are more than 3 months old stocks, not moving. Receivables more than 3 months old, again not moving. All this will be removed from the current assets. And similarly, on the liability side, they would like to take all the provisions. They will also like to convert the contingent liability into actual liability. So because of this, the limit that they will work out for us will always be very less than what we require. So RBI has sensed this, and sensing the hesitation of the banks to go on this basis, they are now advising the banks that please shift to cash flow based lending and not on the basis of asset based lending. In cash flow based lending, we have to project our let us say cash flow for next 12 months, and you can justify on the basis of turnover. On that basis, the banks will be able to monitor the cash flow better, and they will also be able to they will be more comfortable, let us say, in terms of cash flow based lending. But unfortunately, still banks are tending to follow the old system. But I'm sure that as we go along, they will change that basis. During these difficult times, it is our responsibility to convince the banker that we cannot have a very comfortable working capital facility, net assets, net current assets, you cannot stick to those difficult conditions of 3 months stock not moving, 3 months receivable not being paid. All these conditions we cannot adhere to. So they should shift to cash flow based lending, and then you will also feel that when you shift to cash flow based lending, you will be more comfortable in approaching the bank for the purpose of getting the facility. Now, what the government has done during the last few weeks, as we go to as we are in the grip of coronavirus right now, is that they have reduced the repo rate drastically. On it is this somewhere when the new RBI governor took over, somewhere around between October or so. In August, the Monetary Policy Committee reduced the repo rate to 5.40. On 4th October, it was further reduced to 5.15. Now, as the lockdown period started, and they found that the banks have to lend to the industries on a more liberal basis, the repo was reduced to 4.40. In the history of RBI, it has never happened that in one go they have reduced the repo rate by 75 basis points. Each basis point, as you know, is 0.01%. So they have reduced the repo rate by 0.75, which is a huge reduction. It's a massive reduction. Repo rate influences the lending of the banks. It has a very favorable effect. So if the with this kind of a repo rate, banks' marginal MCLR rate will come down, and after the MCLR rate comes down, they will do a benchmark addition. They will do a delta on the MCLR. On the basis of this repo rate, banks will now be able to lend to the customer at a much competitive rate. That is the idea of reducing the repo rate so drastically. One more step the RBI has taken, that is to enhance the liquidity with the banks. Now, in what happened was, in the as against the repo rate, they have a repo. The repo rate is the rate at which banks can borrow from RBI. That is the benchmark rate on which banks can borrow from the RBI. On the other hand, reverse repo rate is the rate at which banks can park their funds with the RBI. Now, in these difficult times, when there is a lot of hesitation on the part of banks to lend, to encourage them to lend, RBI has reduced the repo rate, reverse repo rate. It had reduced in early March to 4%. And just a few weeks, couple of weeks back, they have reduced the reverse repo rate further to 3.75. The idea behind this reverse repo rate is that the banks will be discouraged from parking their funds with RBI, so that more cash is available, liquidity is enhanced for lending to the industries. And RBI has taken one more step, that the CRR, cash reserve ratio, has been brought down to 3%. These two steps are very important and strategic steps taken by RBI to enhance the liquidity of the banks to encourage lending. With this, I'm sure that the banks will find it more advantageous to lend to the units rather than keeping the cash with them. Now, I'll shift to opportunities which are available to us for conserving cash and for conserving cash and enhancing our liquidity in our units. RBI has announced that the bank should give 3 months moratorium for payment of the long-term loans. EMIs can be shifted by 3 months. Now, the point to be noted here is that the moratorium is not interest-free. So one question will be raised: what happened to the interest? So after, if one has cash crunch, we are feeling cash crunch, then the unit should avail of this opportunity of availing the moratorium by 3 months. What will happen to the interest during 3 months? The interest accrued during 3 months will get added to the principal at the end of 3 months, and the entire EMI will be recalculated after 3 months. But very important point is it gives a much needed relief to the units in terms of this in these corona times. And because the NPA norm is 90 days, if you don't pay your installment for 90 days, the banks will classify the loan as NPA. So that has been also relaxed because they are giving 3 month moratorium here. So the NPA norms have been relaxed to 6 months. So this is a very important step RBI has taken, and I would suggest that those MSME units who are having cash crunch, they should avail of this facility. As a measure of strategy to enhance the liquidity position or to enhance the cash position with the units, my suggestion like this is that, your suggestion like this is that if the units have export opportunities, you should position yourself in export market rather than on the domestic market. The advantage of export market is that cash comes in earlier because you open LC, the customer opens LC in your favor, banks will give you the cash immediately. And similarly, during these times when the rupee dollar is hitting the roof, it is almost going to 76 or even more than 76. So your profitability of export operations will suddenly go up because for every dollar exported, as against earlier you were getting 72 to 73 rupees per dollar, now you will be getting 76 rupees to a dollar. So your profitability shoots up in terms of export turnover, to the extent of export turnover. So you can, to the extent, defer, dispatch to your domestic customers and dispatch more to export customers. This has been adopted by some of the major units here, and they've had a lot of advantage. Similarly, there's a delayed cash outflow. The cash outflow is delayed because when you import raw material for export, you have got this Yudan's credit of 180 days maximum. So you, on the one hand, you are delaying your cash outflow for purchase of raw materials. On the other hand, you got early cash inflow from the sale. As soon as your products are dispatched, the money is available to you. This is a very important strategic step, which I suggest that our unit should take advantage of this. Then one more advantage of that is that if you look into your operations, enormous a lot of available opportunities are there for encashing the idle assets. What I mean by idle asset is that you may have slow moving inventory, you may have inventory which are lying for minor defect to be rectified. During these times when the operations are at a low speed, this is the best opportunity to rectify those products and sack them, although with a little bit of price incentive, you can dispose of these and cover them into encash them into cash. And also, if the unit has opportunities, like if you've got a surplus land, you can rent it out like that. And if you've got an idle capacity, then you can also work for others. So that way you can encash the idle assets. A very important part is very close look of you should take of your receivable policy. In your receivable policy, if there are receivables which are long pending, there are minor disputes which you will, in normal times, you will try to sort it out. You may go to legal steps and things like that. Don't do all this. Let us review these receivables very closely, and with a little bit of incentive with the customer's consent, you should convert these receivable as much as possible into cash. Similarly, in your vendor's policy, if you can defer the vendor payment to some extent, that also will enhance your working capital facility. Recently, as an example, once again, I'm from Tata Steel, so I'll give you example from here. They have deferred the vendors' payment by almost 45 days. It added a lot of cash conservation facility to them. Now, one I can suggest to the MSME unit, if it is possible during this difficult Corona times, you can shift to contract manufacturing. If you are buying raw materials from your principal, and that principal is, working capital is satisfactory for him, you can manufacture on his behalf and send the product back to them. And that way, what you will do is that you can cover your operating costs like wages, salaries, all these utilities and things like that. Keep your operations on, maybe at a very low margin, but you will continuity of your operations is assured. And then after the Corona times, when you come back to normal times, then you can shift back to your normal manufacturing. If this is possible, one of the units I'm assisting right now, we have just exactly done this. We have shifted to contract manufacturing. In that, what happens is the value addition from raw material to finished product comes to the MSME unit. The entire margin of finished product is taken by the principal, but it doesn't matter. The entire unit is kept on. Work is going on continuously. Salaries are being paid, utilities are being paid, and so on and so forth. Maybe you are not able to cover your all the fixed costs, but more than 75% of the operating cost is covered in this criteria. Then, if it is possible, you import the raw material. That's a very important step you can take. You set up a little limit with your banker and import the raw material with the maximum permissible limit now is 180 days for raw material. Now what happens is when you open LC, the material comes to you and the cash outflow takes place after that 3 months or 6 months according to your contractual LC terms. Now during this period, what will happen is there are two kinds of risk. These are financed by the bank on the basis of LIBOR. LIBOR itself keeps fluctuating. And the second part of the variable is the rupee-dollar parity. The rupee-dollar parity today is fluctuating every day. From a little over 72 to 73, today we are at more than 76 to a dollar. But to cover that, you can shift to forward cover, take a forward cover of 3 or 6 months. There is a little premium to be paid, doesn't matter, but you at least know what will be your liability. But the advantage of forward cover, these are option contracts. In option contract, you have got a right to buy dollar, but there is no compulsion to buy the dollar. So on the due date, if spot rate is favorable, you can forget about the forward contract and buy spot and discharge your liability. All that you lose is a little bit of premium that you paid for the forward cover. This is a very important step, particularly those units which are exporting. They can import with this condition. And even for your domestic sale, if you can import the raw material, you can postpone the cash outflow and quicken the cash inflow. Now, an important part which I was telling you earlier is to close a look at the production cycle and processes. There could be a lot of opportunities here when you look at the production cycle and process. Number one is that if one of the segment of your market is heavily working capital intensive, like I'll give you an example from my old company, in Tinplate company. There is a segment of the market which are seasonal. This material is used in packaging, mango pulp. As you know, mango season starts from somewhere end of March and early April. Ratnagiri mango comes at that time and it is packed. But the volume of demand is such that production of this material should start late October or early November, and gradually you should build up the inventory and to catch the market in the first week of April. You can imagine the working capital cycle. For 3 or 4 months, you are producing and keeping the material in the stock or a stockyard. Then the market is very demanding. So they will also pay you after they sell the product. So entire cycle from one end to the other takes 5 to 6 months time. During normal time, you can afford it. But during this time, you cannot afford. So what we did at that time was our customers are very happy if you give them exact quantity, exact specification, exactly when they require it. But we cannot afford that. So all the customers of ours who are customers for other products also. So we don't want to lose these customers because of working capital intensity of this product. So as a strategy, what we did was we imported the product and gave it to the customer. So the production capacity released by this shift, we shifted to low margin, high volume, and so the loss of profit or loss of turnover of this highly intensive working capital product was replaced by high volume, low margin item. We did not lose the profit. We did not lose on turnover. At the same time, we kept our customers intact. So this kind of a closer look at production cycle will pay us hands down. Similarly, if you look at the processes, if there are 4 or 5 processes by which your raw material goes into finished product, there could be disbalanced process. So the process 1 and 2 are okay, smooth. When it goes to process 3, your capacity is less than process number 4. So the process number 4 is waiting for the completion of your production cycle of process number 3. So there is a disbalanced capacity. With a little bit of investment, if you can balance the capacity across the processes, then your for a very little investment, your throughput will be very high. This kind of a introspection one should do very closely, so that your throughput becomes, I'll give you a little story here. When Tata Steel engaged a consultant, his name is Dr. Goldratt. He's one of the most expensive, management consultant in the world. He came to our plant, and after seeing the plant, he went to our MD, and he told the MD that, sir, lot of cash is lying on the shop floor, and you can, encash them. Lot of cash is lying on the floor, and you can encash them. The MD was really surprised. He said, what are you saying? So he said that, you've got a lot of, firstly, scrap in steel is like a gold mine. So they get sold at very high cost, and there's a lot of demand for it. There were undispatched materials, work in process, and finished product lying on the shop floor on the dispatch point for very, very little small issues. So he said they have to be sacked first. Then he went to the stockyard. In stockyard, there were lot of stock, non-moving, 3 months, 4 months, for small issues, some little dispute with the customer. And so these were not getting dispatched. So he said, you encash all this, and then you will find your cash flow improves dramatically. Similarly, he had a look at the production process, and he located so many disbalance in the production process, as I told you earlier. So with a little bit of investment, this process was smoothened, and without significant increase in the investment, the capacity shot up. So these are some of the steps one should take during this Corona times. And I'll come to a few points that although RBI has announced a lot of, Honorable Finance Minister has announced a lot of relief packages, these are some lessons we should learn from countries like United States. Apart from $1.7 trillion that he has announced earlier, yesterday or day before yesterday, he has announced another 400 and odd billion of relief. All the SBA units, these are small business association units, which are our counterpart of MSME units. They get a grant of $500,000 each. And to the extent to which this is utilized for payroll payments, this will be converted into grant. So you can imagine the relief that the MSME units or small business association units are getting there. Then they keep the balance which is left over, other than the 80%. There's a limit here, up to the extent of 80% or actual payroll payment, whichever is less, will be converted into grant, and the balance will be treated as interest-free loan payable over next to 2-3 years. So these are very huge incentive, and the wages and salaries of the workers are kept intact, and so that these skilled people will come back to the parent unit after the normal times are restricted. They have the Fed, equivalent of our RBI, has reduced the prime rate. The rate has been reduced to nearly zero. So the prime lending rate itself, the bank will borrow from the Fed at zero rate, and they will mark up their usual markup of 1.5 to 2%. So the net effect of that is that the banks will be able to lend to the units at just close to 2 to 3%, which is a very good rate for borrowing from the bankers. The European countries have more or less similar incentives. So these are some of the lessons we can learn from other countries. We cannot afford something like 1.2 or 1.3 trillion dollars, and another 400 has been added. So almost $1.5 trillion of incentives have flown into the industries from USA. Another step they have taken is, their debt to GDP ratio, because of these incentives, will go to more than 100%. Their borrowing limit will be higher than the aggregate GDP, which is a very bold step taken. But of course, they have got resilience. Their economy is very resilient, and they will come back maybe in 3-4 years' time. It is up to us whether we can afford that kind of incentive. But industries must get some relief in terms of payroll, in terms of cheaper cost of lending, and so on and so forth. RBI's step in this direction is very welcome. Cost of borrowing will now come down, and I hope that with the steps taken by RBI and all the steps taken by MSME unit, we'll come back to normal times as early as possible. So let me stop share. Yeah, as early as possible. So I wish all the MSME units all the best, and I'm very sure that with all the resilience and determination that we have shown so far, we'll come back to normal times. Thank you very much for your kind attention. Now the floor is open. Thank you very much. Yeah, Rajiv, can you open for discussion?
Thank you, sir, for your nice informative speech. And we already have 2 questions from 2 participants.
Okay.
And I would like to request all of them to please give their introduction first, so that our sir and we all can know about yourselves. First one is coming from Mr. Prashant Tripathi. Mr. Prashant Tripathi, please go on and ask the question and introduce yourself, please.
Hello.
Good evening, sir.
So very good evening. How are you?
I am very fine. Thank you very much.
Sir, being an entrepreneur, part of MSME, what are your suggestions, sir? This is a very grim time to us. market is logged, and basically we are pretty concerned, sir. Maximum our operation, we are, I mean, it is field oriented, and we have invest hugely into stocks. It is somewhere around 30% of our total operation, of our total turnover. In last year we had invested in stock. Now market is almost, it is very grim. So how we have to move ahead? It is very, I mean, turmoil situation for us. So I mean,
Yeah, these are no doubt very difficult times. Very shortly, interstate movement of goods will start up. That's what Honorable Prime Minister has said, that after May 3rd, interstate movement of materials will start. As soon as it starts, what I would suggest as a preparation for the dispatch is that you identify your customer segment, identify those products which can quickly move to the customer. All the products will not move at the same time. It is not on. So if you can keep in touch with your customers and identify those segments of products which can be dispatched immediately after the interstate movement starts, and concentrate on dispatches of those products first. For the time being, don't add to the inventory. You can production process will start slowly. First, you should dispatch your product. Not only that, you must also be having receivables, and you can have a very close, review of the receivables. You can request your customers to start paying. So on the one hand, you cannot get all the receivables at the same time. It is not possible. That's understandable. But all the units are not tight on working capital. Those of the units which can afford to pay, they should start paying. And those products which can move now should start moving. If you follow that, maybe gradually over a period of 2 to 3 months, you will come back to normal times. That's my humble suggestion.
okay, sir. Okay. Thank you, sir. Thank you.
Thank you, sir. The second question is coming from Mr. Himanshu Shekhar Pandey. Sir, please ask your question, Mr. Pandey.
Hello, sir. Very good evening. This is Himanshu.
Very good evening, Himanshu.
So I run a consultancy firm named Watch, and I am running from last 2 years. Being an entrepreneur, I had very new client with me, and right now I am focusing to provide the essential services which they feel it's very mandate. So my question is like, I have few human resources working under me. Anyhow, I have cut down some of the payments for them, but surviving in this time is bit quite difficult. So if I relate my question to something like big companies like Google or education institute like Harvard, they are having very good cash in hand to survive in this situation.
That's right. That's right.
But the firms like us who do SEOs or who also contribute to the big clients, so how these two interconnection are going to impact, and how we can survive creating an essence to the big companies as well.
If your area of consulting is catering to the larger units, you can concentrate to some extent on those units which can help you in terms of cash payment. Instead of you can't cater to all the customer segment as of now, because these are very difficult times, and those customer segment which cannot pay immediately, for you it will be difficult to manage. So if you can concentrate on those segments which are larger clients, those larger clients will be generally working capital comfortable. So concentrate on those segments for the time being. Then you can come back to your other customers in due course. That way you may be able to extend and survive more comfortably, or with less discomfort than what will be the normal times.
Okay, sir. Thank you.
Thank you, sir. Another question is coming from Mr. Jilani from IIM Bangalore. Sir.
Wow. Good evening, sir.
Hello.
Please go ahead. Please go ahead with the question, please.
Mr. Jilani, can you hear us? There's no answer. I think some problem is there.
With
Another question is from Mr. Rahul from CII, Confederation of Industries. Sir, please carry on your question. Go ahead.
is there any problem with the audiovisual?
Hello, is my voice audible to you, sir?
Yeah, thank you very much.
Yeah.
Yeah, welcome.
Yes,
Tell
sir.
me.
I'm Rahul Pasari from Young Indians.
Oh,
I'm into,
wow.
sir. Yes,
Yes,
sir, I'm
yes.
into.
You spoke to me
I'm
earlier
in,
today, I
yeah,
think.
yeah.
Ah,
So I'm into business of iron and steel industry. It is often referred as to the backbone of the economy. It's the modern, you can call it the backbone of the modern industry.
okay.
So how you will rate this industry in this COVID times as all this steel industry is under production? Almost even Tata Steel is in 30%, Bhushan Steel is in running with 30%, and the stocks are huge piles. And how you are looking forward in 2-3 months down the line? How you are looking and rating this industry?
You see, in a country like ours, government cannot wait for a long time on starting the infrastructure investment. It will soon very start. Like they have already started in the rural areas, construction of roads, which are highly demanding in terms of steel and cement both. So that way the cycle will start slowly. Of course, it will take a few months' time, but steel is something which is basic to us. So, like automobile, they will give permission to automobile to start first. Similarly, they have already started road construction. Immediately, they will start bridge and other infrastructure industries. So, when they start coming, the demand for steel will automatically pick up. But just a word of caution, to come back to normal times, it may take maybe 6 to 7 months time. So during these difficult times, once again, you should concentrate on those product segments which are like maybe niche segments, but in those segments where you can get your customer to pay you early, and those customers which are like larger units, which are which are little comfortable in terms of working capital, and concentrate on those markets. Then you can expand your market when the normal times are returning. These are, of course, difficult times. I agree with you. Tata Steel has reduced the production to almost 50%. Gradually, they'll come back. When the interstate movement starts, that is the time that the demand for steel will again pick up. So we have to wait for the interstate movement to start.
Thank you very much, sir.
Thank you, sir.
Mr.
Thanks for the answer.
Rajiv Shukla is going to ask a question. Sir, please.
Yeah.
Mr. Shukla.
Hello.
Yeah, Mr. Shukla, go ahead.
Yeah, I'm an entrepreneur here, and we are into manufacturing of automobile bodies. My question is that we have made a lot of capex spendings, and because of two reasons, the shift from BS4 to BS6, and now COVID, the capacity utilization will not happen, and that will result in the sales not happening. But at the same time, even if we take this 3-month moratorium period for the
Yeah.
deferment of EMI, after that the servicing of the loans will actually cause an erosion of the working capital. So what is your suggestion to overcome this?
See, the 3-month moratorium, except that it is not interest free. If you have borrowed at, let us say, 9 or 10%, for this 3 months period, the interest will get added. So if you got a 10% per annum loan, 3.3% of the loan will get added. So again, it will spread over rest of the EMI period. If your loan has a tenure of, let's say, 5 years left or 6 years left, the EMI will get spread over that. So the impact of 3-month moratorium on a long-term basis according to me personally, will not be very significant. Will not be very significant. If you are having a real cash crunch, it is advisable to avail of the opportunity of 3-month moratorium of the EMI. Is that clear? Is that position clear? You can yourself rework the EMI also, because you know the rate of interest and you know how the EMI will be calculated. So out of the total tenure left, on that you have to spread this interest cost of this 3 months. That's how the extra EMI will go up after the 3-month moratorium is over.
So my question was more to do with, like, demand is not going to be there immediately after COVID is going to start.
Yeah.
So is there any other way, you can cope up with the servicing of the EMI other than these 3 months?
Your products are getting exported, you are saying?
No, it is for the local market.
Local market, okay.
Yeah.
Okay. So you can
heavy tipper bodies.
Okay, tipper bodies. Okay, fine. So these are heavy industries. What you can try with your banker is that if they can give you additional working capital on the basis of stock lying with you, what they will do is they'll mark a lien on the stocks. And by marking a lien on the stock, they will ensure that the sale proceed of this stock first comes to the bank. They will have a escrow account for you, and first they will recover the installment of the additional working capital facility that they have given. So that way, what will happen is you're assured after the cash flow starts coming in, you will pay for this additional facility first by marking a lien on this product. Bank will ensure that through escrow account, they will recover the additional cost of funding first. That way, you can negotiate with the bank and try these difficult times. They will give the facility. It has happened. It is common with the IDBI kind of a bank who are more industry friendly. ICICI Bank is one bank which gives this kind of a facility. IDBI is one bank which gives this kind of facility. SIDBI is one bank which kind of this facility. So they will create a kind of an hypothecation of these stocks, and they will mark a lien on this stock, and they will open an escrow account for you. The sale proceed of these, when it gets dispatched, first should be deposited in the escrow account, and from escrow account they will recover their installment. You can try this strategy.
Okay, sir. Thank you.
Thank you, sir. Another question is coming from a very unusual person. His name flashing as Poco Phone. So, Mr. Phone, please come up with your question. Hello.
Good evening, sir. Good evening. You can kindly go ahead.
Anyone to ask any question?
Yes, can I also ask a question?
Yeah,
please,
yeah,
please.
sure.
Mr. Chandrashekhar.
Yeah, I can hear you.
While from one floor you can even otherwise hear me.
I can shout and you can hear.
While I agree with in fact, I agree, 100% agree with what you have said. There are a few things that I think you should have covered, because other smaller companies are also in the same boat. If you are seeing
correct.
ILFS, DHFL,
That's right.
and yesterday another credit rating risk company.
Yeah, Templeton has come down.
I didn't want to take the name anyway.
Yeah, but it is in the press, so I'm not
26,000 crores.
Yeah, Templeton is in the press, so we are not disclosing something which need not be disclosed. It's heavily covered in the press itself.
True. Now this 26,000 crores are also virtually not coming out of the system for SMEs to make use of. One thing probably which could be added is that working from home is reducing costs. So this is the benefit of Corona. That,
Yeah.
we should look at very seriously that can we work from home maybe 50% or something and reduce costs, because even companies like Tata Steel, you have heard the MD speaking, and his report has come in the press also. They are going to cutting costs in a very, very big way.
Yeah,
So, and reducing manpower, improving efficiencies that you have covered already, but working from home must be added, I suppose.
I agree with you, sir. I agree with
A
you.
nice question, sir. I'd like to request you, sir. Please introduce yourself because we don't know your name.
Okay, okay.
I'm Ramesh Nandrajo, ex-Vice President Finance of Tata Steel.
Okay, thank you, sir. Our pleasure to have you in the session.
Thank you, sir. In fact, this is my first session on Zoom because I had never interacted with computers.
Okay, fine, fine.
Fine, sir. Yeah,
Okay.
sir.
Is that all? Can we?
Yes.
Is any other question coming, or we can close?
Okay.
We are not getting any question. Perhaps we have to end our session. Thank you, speaker, sir, and distinguished guests
Welcome.
from Confederation of Indian Industries, members of Young Indians, and other participants for such an informative session. Soon we'll meet again in the next webinar. Till
Thank
then,
you.
stay home, stay safe.
Thank you very much. Thank you.
Thank you, sir.
Thank you, sir. Thank you.
Thank you. Bye.